Facebook. I will be right with you. Waiting to connect to Facebook. And we should be live on Facebook. Hi, everybody. I hope you are doing well. I'm Sami Abu Saad, Director of Education at T3 Live. I have a quick video for you on what happened today in the market. And I want to share with you a very, very powerful setup that I use in my trading. Before we start, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. Just so you know, I put out a free ebook recently. If you'd like to get a copy of that, a PDF copy, link is in the description. Okay, so just click on the link, type in your email address, and T3 will send it to you automatically. But with that said, without further ado, I'd like to show you today's setup in the market, which resulted in a nice sell-off. Here it is. This is the daily chart of the QQQ, which is the tracking ETF for the NASDAQ 100. The setup, as you can see here, take a look. I already shut down. I'm ready to call it a day. But I got an email about this stock, which I called short on the weekend, QDEL. And somebody said, is that the breakout pattern the breakout failure that you talk about? And it isn't. It's similar, but it's not. Remember, I had the video on the weekend, and this was on the list as a short. So somebody's in it short. Nice job. It looks good to me. Looks great. But this is not the same as what we got today in the market. So I got that email, and I thought, responded to it already, but I thought I would like to clarify, go over the setup with you, because it's really magnificent. It's powerful. And I think you'll enjoy it a lot. So take a look. Here's the setup. If this applies to all stocks, any tradable instrument in a free market that's traded in a free market, in an open market. If you have a run-up or a sell-off, so like so, and then the stock or the market in this case comes in, goes back up, makes a new high, the bar that made a new high on the very next day, that bar's low gets taken out, it always leads to lower prices. It's always a short, basically. So again, if you have a run-up, a sell-off, a run-up again, this is a peekaboo new high, basically. And the bar that made new highs, that same bar, on the very next bar, the low of that bar gets taken out, it's always a re-entry if you shorted it. So, for example, I shorted the market, but I didn't short here. Otherwise, I would have re-entered today. I shorted here, and I had to cover it. Otherwise, I would have lost a good amount of money instead of making some money. But at any rate, so here's the run-up, here's the sell-off, here's the run-up again. The bar that made new highs, the low of that bar got taken out by the next bar, today's bar. It always leads to a decent sell-off. I'm not predicting that this is going to be the top in the market. It might be, but I think we had a real good shot at topping out right here after putting in so many green bars in a row into FOMC, the acceleration, the volume increase. So that should have, been the top, and we didn't. We went back up. Is this the top? It's tough to say. I like to be objective. I pride myself in being objective. It's not an easy call. I think it's a short-term top, but we're also not very extended anymore. This is the 20-period moving average on the daily chart. We're just right there. So do I think we're going to reach it? Sure. Do I think maybe we drop a little bit below it? Sure. That's completely doable. In fact, other than the rising 20, basically we have no support all the way down to 230. There's not much support to the left. So maybe, okay. But my point here, I'm not coming on tonight to predict a top in the market, though it might be. I am coming on to share with you a powerful setup. And just before you hit that send button to email me about it, I'm happy to always receive your emails, but I just want to make sure we're on the same page. You get the run up, you get the pullback, the retest, and the bar that makes a new high, that peekaboo new high. If the low of that bar gets negated by the very next bar, not 5 bars later, not 5 bars, the very next bar, if that low gets negated, it always leads to a big sell-off. Okay, always. You can even see it, I think, on the way down here. Take a look. The sell-off in March, the run-up, we moved up a couple days. The sell-off, notice the bar that made a new low. This was the bar that made a new low. On the very next day, we took out the high of that bar. That's the bottom. You got it? So here it is one more time. We had the sell-off, the 2-bar run-up, the sell-off again to retest the low. We broke under the low. The very next bar, which was this bar, the very next day, we took out that bar's high. That was the bottom. That's how we bottomed, actually, in the market. Okay, got it? So that's a setup. It's very, very powerful. I wasn't really thinking we were going to even take out the low. Well, we gapped to the low. I wasn't thinking we were going to come in much today. But look what that setup resulted in. A 2.5% sell-off, I think. Or, no, 2% sell-off in the NASDAQ. 2.5 in the, or 2, let me just double check. And I think it was 2.5 in the SPY, 2.6% in SPY, and IWM, which is the Russell 2000, 3.3%. But the setup doesn't exist on the IWM or the SPY. It exists on you can see it on the QQQ. Now there is another version to this setup that I also teach, which is, I will do a separate video on it because I don't want to confuse you, but it's a completely different setup. It's a very similar concept. I call this other setup the breakout with no follow-through. BONFT, breakout with no follow-through. Let me show you what it looks like, but I'll do a separate video on this because I don't want to confuse anybody. Here it is. I saw it on MIT today, but I saw it late. So here it is. If you have a sell-off, and the sell-off is significant, and then you get a breakdown bar, if the breakdown bar, so again, big sell-off, a breakdown bar, and the breakdown bar is followed by a narrow range bar, and the narrow range bar's high gets taken out, that's called the breakout with no follow, the breakdown with no follow-through in this case. So check it out. A sell-off, a base, a breakdown, doji bar, and the doji bar's high gets taken out by the very next bar, it's always an entry to play long. Always, always, always. Show me a chart that looks like this that didn't even work. Now, again, before you send me all these emails, happy to get your emails, but listen to what I'm saying carefully. You have to have a big sell-off, okay? You have to have a base. You have to have a breakdown bar. You have to have a doji bar. And if the doji bar's high gets taken out, you want to play it long, okay? It's always a fade. And look at the nice big move. In fact, we had it even here, but it wasn't much of a base. So we had a big sell-off, a 2-bar base kind of, or 1 bar, just the doji bar, a breakdown, doji bar, over that doji bar is high, long. And it had a nice big move. Okay? So that's the setup. I'll do a separate video on it because I have a lot of examples I can show you that look much better than the MIT today. Wasn't that good? So don't worry about this setup for now. I'll do a separate video on it, but there are 2 breakout failure setups, one of which happened today on the Qs. Same exact setup happened down here at the bottom. Okay? So I hope you enjoyed today's video. I hope you are doing well. You're taking advantage of the volatility. We don't always have great volatility, so when it's there, you gotta take advantage of it. Okay, I hope you are. I hope you're in a trading room where, you're able to take advantage of it, not in a trading room where, the leader of that room sits on their hands and says, oh, well, the market is bearish today, so let's not do anything. No, when there's volatility, that's when you take advantage. Here's today's P&L. No, this is month to date, by the way. 60 grand, 62, 63. And then here's year to date, right? 450 year to date. And my best play so far this year was HTZ, and today's play I think was the best play was HTZ today. yes, it was HTZ the best play. And actually both accounts. In this account, notice for the day, $9,900. I'm not showing this to show off or anything like this. You've all seen my P&Ls many times. But let's see, only show. So here's today's play is in this account. So in this account, $3,500, and also HTZ in this account. Now this account, I had HTZ short. In the E-Trade account, I played it long, HTZ. I also played the AMC long, played the HAL short. Oil dropped a lot, like 5-6%. I did HAL, I did MRO, I did MTDR. Those are all oil. CDEV was also oil. And then losses, let's look. The biggest loss today was IBIO, $149. CPE lost 140. How can you lose when you keep your losses limited? In this account, well, I had a bigger loss. TBIO, $300. That's it, and 140 on the CDEV. So how can you lose? How can you not make money? Let's put it this way: if you keep your losses limited. And I think if there is a secret at all to trading, this has got to be it, which is the golden rule of trading, right? It's called the golden rule for a reason, because it is the golden rule. It's the #1 rule. Let your profits run and keep your losses short. Cut your losses short. So I try to do that as best as I can. I don't aim to have 100% batting average. That would only be a boost to my ego. I don't care about that. What I care about is making money. And so I try to keep my losses small as much as I can. That's my #1 goal always. And then similarly, if I catch something nice, then I try to ride it for as long as it goes. HTZ today had it was up 100% at some point. Had a big move up off the open, huge move up. I didn't actually catch the entire move on the way up. Didn't catch the entire move, but it was nice. So here's the move this morning. Look at that. Look at that. From like 140, right? 150, not even 150. Almost 145 to 240, 250. Amazing. Now, so I did that in the E-Trade account, and then I did the short in the Sterling account. But short, I had a hard time getting filled on it. So I didn't do that much. I think it still made a good amount in this account. Yeah, $3,200. So not bad at all. Again, I hope you're in an environment where the leader of that room is, the chat room is actually calling out plays, taking advantage. I called the AMC also long, which made AMC, I called it long. It made $2,600. That's pretty good. So again, hope you're able to take advantage. If you'd like to learn more about my services and what I do, links in the description. But with that said, I hope you have a great evening. Good night, everybody, and I will talk to you soon. Take care.